The market is struggling to gain momentum, but it is off to a better start compared to last year. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, March 6th. We know that selling or buying a home can be very stressful and confusing. That's why we do these weekly videos, so you can know how the market is impacting your options as a home seller or buyer. Starting off, let's look at how the market performed this past week. There are 52 homes on the market now, 10 more than last week, and the average asking price is roughly the same, just over 1.9 million. 8 homes went pending, 2 more than last week, and encouragingly, the average asking price on those 8 pending sales increased significantly from 147 up to 1,732,000 this week. 4 homes closed, much fewer homes than last week, but the average asking or closing price stayed basically the same in the mid 1.7 range. So now we know how the market performed this past week. Next, we like to look at how the indicators are helping us determine where the market might be heading. Before I do that, if you do find this information helpful, why don't you hit the subscribe button down below? That way you won't miss out on future updates. And while you're down there, why not share it with a friend also? Everyone deserves to be in the know about their local real estate market. Okay, let's look at these broader indicators. Excuse me. Like I said, the inventory is up to 52 homes, which is a little higher than our average inventory level here in San Ramon. We had 18 new homes come on the market, with only 8 going pending this week. It shows that we have more sellers that are to start this year than we did last year. Total inventory plus homes sold is up about 30% this year compared to last. That is good news for buyers. They might have some real opportunities this year with more inventory, more selection to choose from. On the flip side, that higher inventory number is killing our turnover rate. There were about 2.25 new homes on the market this week for every pending sale this week. That drove our turnover rate down. That number sits below 50% now at 48%. Hopefully, with more selection, it will kickstart the buyer activity since there is more to choose from. Although our turnover rate has slowed down, the lagging indicator of the over-under number, closing price, has improved again. We're back above the break-even line, which is right there. Whoop. I should draw that out more clearly next time so I don't have to hand draw it wiggly every time. It had dipped into the under range last week, but it rebounded into the over again. It is still a negligible amount over, less than 1%, which is well within a standard deviation, but staying up in the over should also help encourage buyers to move quickly on homes that are available that catch their eye, which in turn would greatly improve our turnover rate. The average sales price over the past several weeks has seen a significant and consistent decrease. You can see here with a steep drop off last week. I have been saying this a lot, but it bears repeating. The lower average closing price does not indicate that home values have fallen that significantly. The lower average prices are driven by a lot of buyer activity in the lower price range. Homes are still holding value in spite of this lower market. There was a 2% drop off last year, but 2% is, pretty consistent and very manageable. The triple Q dropped this week by 2%, speaking of 2% this week. This stat is not horribly surprising considering how the rest of the stock market reacted to the US striking Iran. Stock holdings play a big role in a lot of our buyers' cash needed to qualify for their loans and to close. So any stagnation in the stock market is going to hurt affordability in a large buyer segment of our buyer pool. But we'll see how this reacts. This might just be a 1 week hiccup. And along with that down affordability stat, interest rates are back to starting with a 6 again. We were so excited to have it start with that 5 for 1 week. They moved up just 2 basis points to a 6% even. Last week when it dipped below 6 for the first time, it felt hopeful, but with the new conflict in the Middle East starting this week, I would be surprised to see interest rates continue to fall. The market is still struggling to gain any momentum. However, the good news is that we are starting the year off trending towards a higher overall sales number. The new conflict in Iran could temper the market even further if it continues to escalate, but as of now, values are holding, and there seems to be more seller interest in making homes available to buyers when you compare the market to the start of last year. And that could in turn cause more buyers to enter the market as well. Thank you for joining me on this weekly update. I hope it helps you understand how our market is impacting your options. Don't forget to hit the subscribe button down below and ring the notification bell so you can stay informed on how the market continues to shape up as we head into spring. And if you have any questions about navigating the stressful, confusing process of buying or selling a home, leave a comment down below or reach out to us directly. We are here to help guide you every step of the way. Have a safe weekend, and I'll see you next week with a new update.